Hey, what's going on, everybody? This is Sean Rico with Sean Rico Forex, bringing you another video. Man, I appreciate all the love and support that y'all been giving me. I actually love making these videos, trying to teach people about the Forex system, how to trade. There's just so many things that you can talk about when it comes to trading Forex. But for all y'all that don't know, right now I got my MetaTrader 4 up, and as you see, I'm using what's called Cynthia Basic Green Tomatoes for newbies. For those who don't know, I love using the green tomatoes system by Cynthia. Listen, if you're interested, after you watch this video, if you're interested, just check out the link below in the description. She got like 4 different versions. Like, you got the basic green tomatoes for newbies, you got the advanced, extra advanced, and extra advanced pro. They're all great. Each one is, as you move up, you start with the newbies and move your way up. And listen, by the time you get to that 4th one, it's just so powerful and it helps you in so many ways. But for those of you that are just starting off with the basic green tomato system, this is what the charts look like. Right here, you have your candlesticks. You got some early entry arrows to show you. These little green dots and red dots, those are parabolic SARs. All that's in her PDF. When you go to download her system, all that's in the PDF. She has great videos, very self-explanatory, and she walks you through step by step how to use the system. And what I want to talk to you about today, I want to talk about when the 50 moving average meets the basic green tomatoes. So I personally like to throw moving averages on there. Now, for those y'all that's doing this, the green tomatoes has everything you need. Those of you that are used to trading and y'all do like moving averages, especially the 50 moving average, and I think a lot of people like to use the 50 moving average, and then you have the big banks, they like to use the 200. If y'all don't know about the big banks, they love the 200 moving average. The big banks, 99% of the time, love to use the 200 to base a lot of the trades and stuff off of. The big banks, they trade big money. Say it with me. Big money. That's what they like to trade. But we're just going to get into the 50 moving average. I don't have time to explain it. When you get a chance, just do some YouTube, Google 50 moving average. But let me show you how I'm going to add the 50 on here and how we're going to use it with the basic green tomatoes. Well, I'm going to show you how I use it, right? So you go up here, click on the drop down that has the little green plus there, moving average. I've had it on here before, so that's why you see the 50 right here. The 50 moving average, simple, close. I like to use aqua. I like to make this a little bit thicker. Boom. See that? See the aqua line? That's the 50 moving average. And right now I'm on, what am I on? Great Britain, JPY, and I'm on the 4 hour. If you don't know anything about the 4 hour, I just did a video, the last episode, about this, about the 4 hour. I love the 4 hour. One thing I want to start off talking about, just by looking at this 4 hour window, right? You see how the 50 moving average is cutting through the candles? A lot of times I try to stay away when it's cutting through the candles. And then you see up here, it's cutting through the candles, right? Now that stuff is close and cutting through the candles. I tend to stay away if it's anything close like that. But for example, let's go back. So we're in this week, the week before. This one all started. So as you see, it's cutting through the candles right here, right? And then boom. A lot of times you want to line up the double green lines right here, right? You got the green parabolic SAR, 50 moving average, and we're in a position that we're about to go up, right? If you look right here, if you study her videos and her PDF, right? You don't even want to get in the trade until you cross over this 50 line right here in the RSI. Once you cross over to 50 with green, 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 double green lines, and let's take a look right here. See right here the MACD? Her MACD is awesome right here. So you notice how you got this purple baseline. You want everything to be over that as well, right? So if I was to take my rectangle right, say I would have drawn about right. Let's take a look at this area right here. Anywhere in here, right? All the way up to this point. Look at all this right here. You see when it started right here, this started a whole new week. So look, here's the 50. Oh yeah, that's the main thing I want to say about the 50. I almost forgot the main point. When I trade the 50, I want the candles to either be above or below. That's it. In this case, the candles are above. Long as it's above it, I'm hopping in that trade. If it's below it, I'm going down, right? I'm selling. If it's above it, I'm buying, right? So in this instance, so you see how the 50, how it bounced off, bounced off, bounced off. Came up a little bit, bounced off, bounced off. No, I didn't bounce off, but it's the end of the week. You don't want to trade. Let me tell you something. You don't want to trade on Friday, the last couple of hours before the market closed. Stay away, because all the market is doing is just setting up for Sunday night, Monday morning. That's all the market is doing. Matter of fact, 99.9% of the times, anything after Thursday night, I get out of the market. I just don't risk trading Friday, because I know a lot of my friends tell me that's setup day for Sunday night, Monday, right? But look, so this is the start of a new week. Double green lines, right? Matter of fact, let's take a look at what these green lines are called. I keep forgetting what they're called. Trend slope. Those are called trend slopes, right? So these double green lines right here is Cynthia's trend slopes, right? And then you have the green candle. Of course, all this is dealing with the buy, right? You have the big dot parabolic SAR, right? The 50 moving average is below the candle, right? Then you got your RSI, which is above the 50 line, right? And then just take a look at this. Look how far your MACD, your green MACD, is above the purple. These are all signs for go. Go, go, go. Now, see how many pips we can catch off this, right? So let's say we got in right here. Let's say if we even waited till we just got right here to the next candle, right? Just because you wanted to be safe. Get it right here. Look at that, 140. Even at the lowest point, dropped down to 56. Look at this, going, going, going. And of course, if you let Cynthia, if you watch her videos, she basically tells you the good point to get out is when the parabolic SAR changes back to red. So you could have done it with this candle that turned red, or you can wait till the big red parabolic SAR. So say you got it right there. Man, already you're looking at what, Thursday, I think that is? From Sunday to Thursday, you done caught 123 pips. 123. You know what that can do for your life? That can change your life. Especially depending on how much money you put down. Like me, I like to use risk management, so I don't put that much. You know, as your account grows, then your risk should grow, you know. But you don't want to get too out of control, you know, with bumping up your lot size. But 123 pips in 1 week, and that's just off one pair. There's so many other pairs that you can trade. But I just wanted to show you how I use the 50 moving average. I like the 50 moving average. I think it's great. And like I said, you know, then when it starts to drop below it, right? But see right here, let me tell you why I wouldn't trade. There's a couple of reasons why I wouldn't trade. After you do a nice trend that was going up, and then your 50 starts to cut through candles like this, stay out of it. Stay out of it. Look, let me show you something. Look at the distance between that candle and this 50 moving average. Do you see the distance between here and here? The further you're away, the further that your 50 moving average is away from that candle, the better the run's going to be. And you notice right here, when we would have got out, see how it's starting to come down and come back and get closer right here to the 50 moving average? Look right here. And even if you would have stayed in all the way right here till it got back in, same thing. I mean, let's catch the pips from there to there. Here, and boom. You see it's about to come down, and it touches. You're still at 124. There's no different that if you would have got out by right here, 113. Actually, you would have made a little bit more if you would have stayed in till it came back down and touched it, 128. Do you get what I'm saying? A 50 moving average. And I don't want you to know this. What goes up must also come down. So the further those candles get away from the 50 moving average, trust me, those candles are going to come back down, and it's going to touch. It's going to come back down and touch that 50 moving average. It's going to touch. It can only get so far away, and it's coming back home, baby. Come on back home. All right, so that's it. I want to keep it short and sweet. Like I said, the basic green tomatoes is a great system. You know, you can click down on the link down below, purchase it, try it. And I'm just showing you how to add the 50 moving average. When the 50 moving average meets basic green tomatoes, it's a beautiful thing. Now, do you need a 50 moving average? No. Cynthia's basic green tomatoes, self-explanatory. You can do it without it. But for those that are a little bit more experienced and you're used and you come from a place of 50 moving averages, the 50 moving average can be your friend. So listen, I hope that helps you out. Leave a comment down below, like, subscribe. Click on the link below if you want to try the basic green tomatoes. Great system. Till next time, this is Sean Rico with Sean Rico Forex. We signing out.